Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. We got a real treat for you today. You get to watch me build a trading method, build an algo, and it's pretty darn simple. Now, this is YouTube. It's for educational purposes only, not investment advice. Go ahead and take a look right here. You can see where it says for more free trading, link in the description right now. If you click on that link and you send us your email, and I don't care if you give a fake name or whatever, we're going to go ahead and send you some data on when we're going to do a free workshop. You're going to watch me trade for 2 or 3 days. You're going to watch me with my logic, using my algos, things like that. And that's going to be free. We'll let you know when that is, probably later this quarter or early next quarter. And I'll go ahead and give you market updates for free every Sunday. So go ahead and do that. Also, a quick reminder here, nothing's ever guaranteed in trading. And in the interest of keeping this video up on YouTube and Google Ads, I have to say I'm not making any claims at all as to whether or not this is successful. This is merely an exercise in building an algo. So just keep that in mind. If you want to learn how to back test it, go ahead, click that link in the description. We'll be sending out more videos and instructions on how to do such things. Just give us your email, like I said before, fake name, real name, we don't care, and we'll send it off to you. Now let's jump into the algo. We're going to take a look at the euro versus the dollar here, and we're going to start by talking about what indicator I use. Like I said, it's only one indicator that I use. So if you click up here where the indicators are, you type in stochastic, S-T-O-C-H-A-S-T-I-C, momentum index, and you see it there right under technicals. Click on that. It's going to put it right on the chart for you. So there you see it on the bottom of the screen. This is an oscillator. I'm going to go ahead and tell you how this works, and I'm going to explode this pane so you can see it up close here. There is a blue line and an orange line. The blue line crossing over the orange line, as in right here, usually means the price is about to get bearish. It doesn't mean that it gets bearish. It means it is about to get bearish. Now, if the blue line crosses above the orange line, that means price is about to get bullish. It doesn't mean that it does get bullish. It means it's about to get bullish. So when does it get bullish or bearish? Bullish meaning price goes up, bearish meaning price goes down, for those of you who are new to the game. Well, this has to do with these levels. You have a 0 line in the middle of the oscillator, and then you have plus 40 on the top here and minus 40 on the bottom, right? Now the 0 line is where it matters as far as getting bullish. When these two lines cross the 0 line to the top side, that means price is getting bullish. When they cross down below the 0 line, it means price is getting bearish and wants to go down. There are some tricky times where price crosses down and then crosses right back up. Those are bad signals. They cause you to lose trades. Now, we have a way of filtering out a lot of those. That's what this is all about. But before we get there, let's talk about how most people try to trade this indicator versus how it is supposed to be used and traded. The way it is supposed to be done is what I just told you. When these lines cross above the 0 line, that means price is becoming bullish and longs are in. When price crosses below, the shorts are in. What a lot of people do is they pay attention to when price goes above the 40 or below the negative 40. When price goes above this 40 here, that means it is overbought. And then when it crosses back down, a lot of times it becomes bearish, but not always, right? Now, when the lines cross below the negative 40, price becomes oversold. And a lot of people will just start buying right here because they think price is going to go up. And sometimes it does. You get that cross where the blue goes above the orange down here, and you think price is going to go up. But does it do that in this case? Let's take a look at a couple of examples here. We got 1, we got 2, and we got 3, right? Now, example 1 is right here where price goes above, and a lot of people might go short. Example 2 is where price goes below, and a lot of people might go long. Example 3 is where price goes above, and a lot of people might go short. So let's see how this all works out on the main chart with the price. Okay, so example number 1, price went up, and you sold, and you won. Big win, as a matter of fact. Awesome. Now, example number 2, price went below, right into the oversold territory, and you think price is going to go up. So you decide to go long. Not so much. Price went against you, you lost your trade. Here's another example on the bottom here where price goes into overbought territory, so you want to sell it, you want to go short, and you sell it and you go short and price goes against you once again and you lose your trade. So this is not the way to use this indicator unless you're able to filter out the bad trades, which is what we're going to talk about today. It's how we do this. Now we know how to use this indicator. What we're going to do first of all is learn how to manipulate the time frame on this indicator. Now the easiest way to do it is to click right on the indicator on those lines. You're going to go to where the inputs are on the left. You're going to go down to to time frame where it says chart. That means that it's going to match the chart's time frame, which in this case is the 30-minute chart, okay? If you want to change it, you drop down here and you change it. And that's what we're going to do. We're going to add this indicator on once again. Click up here, type in stochastic momentum index like we did before. And here we see it on the bottom of the chart. It matches the one above except for the lines that I drew on it. So what do we do with this? Well, double click on the lines and you go to inputs on the left and you change this to 3 hours. We're going to do a 3-hour stochastic RSI. And we're going to add another stochastic momentum index once again. And we're going to go ahead and double click on the lines. We're going to go to inputs. We're going to change it to 12-hour. So now we have 3 stochastic momentum indexes on the chart. This initial one here at the chart time frame, the 30-minute. The next one down is the 3-hour and the bottom is the 12-hour. And they're all running at the same time. So what do you do now? Well, there's a set of rules to this algorithm. We're going to talk about those rules right now. Okay, so you can see this right on the screen where it says entry conditions. These are the rules. We're going to talk about them one at a time. You don't have to know all this right now. Just know that H12 means the 12-hour SMI, H3 means 3-hour SMI, M30 is the 30-minute SMI. First rule here is that the 12-hour SMI is the trend. That's your high time frame trend. So let me explode that. It's all about the flips. We're not worried about overbought, oversold, any of that. But if the 12-hour SMI, purple, crosses above the yellow, that means bullish. That's the trend. It's a bullish trend. If the purple crosses below the yellow, in this case with these colors, for you the colors may be different, but if the fast crosses below the slow, then you're going to be in shorts. If the fast crosses above the slow, then you're going to be in longs. So you can only go with whatever this one says first, right? Now next, you have to have this 3-hour match the 12-hour, right? So let's go back here a little bit. In this case where I put this first blue line, this crossed below, that means shorts only, right? So if we were going to play it that way, then in between here and here, you can only go short. So the next rule between these two blue lines, besides that it has to be shorts only, is that now the 3-hour has to match. The fast line on the 3-hour is below the slow line on the 3-hour. So here it is right there. Now it's in between these two areas where we can go short. That means we bet on the price going down. So what's the next rule? Big surprise. The 30-minute time frame has to match the 12 and the 3, meaning the SMI has to cross down for us to go short. Okay, so let's go ahead and explode that SMI here. That means that we can only go short here. That's essentially our signal right there. As soon as that blue crosses over, you got to look at the candle right after. That's when we can go short. Now let's see what happens to price in this little mini example. Now I might not trade this because of the time of day. There might be a lot of reasons why I don't trade this, but you can see price does go down at this time for at least a few candles, right? So just a mini example of how this works. There are ways to optimize this. My back testing was not really optimized. You're going to see some lost trades, but you're also going to see profit in the back testing. We're going to get there in a minute, but let's go ahead and do some testing. As we're testing and identifying trades, I'm going to go ahead and show you how we enter, exit, stop losses, all that kind of stuff. So first, let's identify a trade. We're going to just go for shorts because we see the purple on the 12-hour crossing below. So we'll put our line here. Now we know we can enter shorts after that time. And then we go to our 3-hour, and that's right on line. It was already short before that. So we're able to go short here after that line. So now we have to have short conditions on this. And here we are. It's already below. We can enter a short. And then when it crosses again, we can enter a short again, right? And as long as conditions are short, we can take a short every single time this crosses below if we want to. But let's just go ahead and take a look here at this example. Now, before we start doing these tests, understand that this is not a guaranteed algorithm to win. As a matter of fact, you have to learn how to optimize it. You have to learn how to backtest it properly. Even if I gave you a winning algo that I trade, you may not win trading that algo. This is more of an educational process, so we're going to show you how to test it, but just because these next tests may be winners doesn't mean they will all win or that any will win. Just had to put out the disclaimer. So here we go. So we know both of these lines right here mean that we can go short. That being the case, how do we determine our stop loss? Well, this is a fast algo. This particular algo uses very basic support. It's not a very specific rule here. We just want to see a change in the candle trend, right? So here you got the candle trend going up and then it flips down, right? Well, that right there is going to be the resistance, if you will. That's going to be where the beginning of building your stop loss is. You can't go short right there because the signal did not happen. It happened on this candle, so we have to wait for that candle to close and then we will go short right here. Our stop loss is going to be the spread above that little resistance that we painted, right? So here's our little resistance. resistance right there. I usually do a little bit more. The spread for the euro versus the dollar is 1.5, 1.6. Sometimes it goes to 1.8, so I do 2.0. All my back testing for this algo is 2.0 pips, right? So you got 1.15149. So you do 1.15169. And yes, that is tight. These are very tight stop losses, right? Okay, so now we're in a trade. How do we know how to take profit? Well, that's easy. Your first profit taking point is at a 1-to-1 risk to reward ratio. So we adjust our P&L to be at 1-to-1 risk reward. You can see it right there. And what I do is at the 1-to-1 risk to reward ratio, I take off 50% of my entire risk. So let's say that my risk here is $100. I have a small account, $5,000 account, and I'm doing 2% money management. So I have a $100 risk. That means if price stops out, I lose $100. Well, I take off half the risk at that 1-to-1. So right there is a $50 profit immediately. And I lock in that 50 by taking the stop loss and putting it to break even at that point. So as soon as it crosses that 1-to-1, there's no more loss. So essentially price goes to where you entered and you're out of the trade. And you got $50 in this case, half your risk to go ahead and take home no matter what. So how else do we get out of this trade? Well, the way we do that is by letting the 3-hour SMI cross the other way. So where does that happen? We're going to look on the indicator here. It happens all the way over here. Now you might be able to optimize this better. You might have a different formula that works better than this, but this is keeping it simple, right? I'm not going to give away all the secrets. I'm just going to give you the basics. You get to do your own optimization, but here it is. This is where you would exit with the other half of your risk. So what kind of win is that? Well, let's see. You're giving up a fair amount of profit here, but it's still a very profitable trade. You're getting out on this candle here. In fact, right after that candle. So you got to go a little higher here, right? Yeah, sure. You could have gotten out here, down here, but how did you know to do that, right? I'm trading based on rules. So sometimes you give up a lot of profit for a certain level of certainty. Now this is going to be a massive win though. And the wins are not usually this big, by the way. This is a lucky win. The wins are usually a little smaller, but in this case, this is a 4.53 to 1 risk to reward ratio. So what that means is that if I had not taken out that first $50 here, then this trade would be worth $453 to me, right? But I took $50 out, so there's only half the risk left. So you got to do 50 times 4.53, which is going to come out to about $230 or so, just under that, like $226, I believe. So you got 50 to begin with, then you add another 226, and that's 276 is your total. That's your total profit from this trade. Risked $100 to get 276. Now, you might be tempted to hold on, but you're going to find out as I backtest here that there's a lot of trades that end up at $50. This is a lucky big run, probably a news event. They don't usually win this big, right? So just a little disclaimer there. But we have a second trade, don't we? What does that look like? We have this trade that you would enter right here. And we have our little local resistance here, right there. So that is going to have a stop loss at, of course, very close to that. And our 1-to-1 risk to reward is going to be back here. So we're going to take $50 out right here, right? It certainly is still going to go here, we can tell. And then we have the same exit as before. So you're going to run multiple trades on this. You might want to pyramid and limit it 2 or limit it 3. You're going to have to test to find out what's best for you. But this is 216. So you got to divide, you have your 50 initial dollars, right? And then this would have been $216 had I kept all the money in the trade, but I didn't do that. So it's actually $108 plus the initial 50, $158. So that's $158 right here. Now again, this is kind of a home run. You get 2 trades in a row, you're going to pull in about 400 some odd dollars. The results are not usually this great, right? But that's what it is. So let's see if we can find a trade for the longs, and then we'll go ahead and take a look at the back test numbers. Let's go ahead and go all the way back to where we don't know what's going to happen yet. Let's go ahead and take price off the screen, and let's see if we can identify a trade that's successful just by going back and looking for that 12-hour to flip. Okay, so I've taken price off the screen and we're just going to fly blind on this one, and we're going to find an entry without really knowing what happens yet. So we got a 12-hour flip right, not that clear, it's a little murky right here, and you'll find that as you're really trading this, the flips are not quite as clear. You want to wait till the candle to close. You're not going to get these wonderful entries that you think you're going to get on a backtest, but you'll still probably be successful. You just got to learn how to backtest. We teach that over at Algo Factory, all right? So we have a 12-hour flip right here. So let's see what happens with the 3-hour. Well, that's bullish. Let's see what happens with the 30-minute chart. We have a flip right here. Now that's way high up and overbought. Most people wouldn't want to try to go long on that, but can you go long on this way up here? Let's put it to the very end so we don't know exactly what's going to happen. And let's take a look at what happens with price. Okay, price is back on the screen, and this is where we're going to enter on the candle after this, right? So let's go one candle over. Let's bring price down the screen a little bit here, and we're going to go ahead and go long right there. Now the most simple support to look at is going to be where these two candles come right here. You could use this this. 1-bar reversal if you want to. It's a little more risky. That's actually how I do it. If you want to be safer, you can use this kind of 1, 2, 3. Either one's going to work in this case, I think. At least it's going to work for the algo. So I'm going to go ahead and do it my way right here. So my stop loss is going to match right there. And let's see how this trade goes. Okay, so we got a 1-to-1 and beyond that. We're going to win this trade. It's a question of how much. Okay, let's mark the 1-to-1. Oh yeah, this is a good trade. Okay, so we got 1-to-1 risk to reward ratio right there. Now half of our trade is out. Stop loss is at the entry. Let's see how far this goes. Let's just go ahead and not even look at price. We'll just look at the indicators, in particular our 3-hour. Remember, when the 3-hour crosses against, that's where we take the rest of our profit. So let's take a look at what that is. Now right at it as it crosses, you're not going to get that. You need to wait till the following candle, right? So it won't happen right at the cross when you're back testing. You need to wait for that candle to close, which is going to be one candle over from that right there. And in fact, it's probably going to be even one more, but let's go ahead and be conservative and say one more candle right here. Okay, so let's tally up the win. This is a pretty lucky win too. You know, they're not always going to be like this. A lot of them are just going to turn against you after giving you $50, right? But in this case, let's just be conservative and exit right here. Now, sure, you could have gotten a lot more profit out of it, but how did you know that? You're following rules, right? So we'd be conservative. Now, we took $50 out. If we left all the money in, this would have been a $481 win. You're asking me, why don't you just leave it in every time? Well, just because we got a couple of lucky examples here, there's a lot of examples that turn against you and you get that $50 and you get out. And that's what keeps you from losing money, right? If you just leave it in every time, I haven't found that that's profitable. So in this case though, instead of $481, it's actually about $240.50 that you pull out. So $240.50 plus the initial 50 is $290.50. Well, so let's just say $290. There's going to be fees, all that kind of thing. That's a $290 win on a long. Now you're going to lose trades. You're going to get $50 trades. You're going to even sometimes get little tiny wins like $15, $6. You know, just the algo keeping you from losing money, right? Now, normally at this time, I would start to do a back test. However, we're going to go ahead and save that for later. I've given you the mechanics of how to build the algo. Now, if you already know how to back test, of course, you can just go on and do that. Back test, optimize, figure out your best stop losses and everything else. If you don't know how to do that, click the link below, free trading, all that stuff. We teach all this stuff over at algofactory.tech. Now, if you want to watch me trade, I'm going to do a free workshop. It's going to be later this quarter or early next quarter. I'm going to trade for 2 or 3 days while you watch. You get to see my thought process, some of my methodology, might even reveal a secret or two. We'll see about that. Click the link in the description right there. You're going to get the algo, you're going to get the weekly updates, and you will get the invitation to that free workshop. Thanks for watching. I hope this was helpful. Come on over to algofactory.tech, learn how to trade like a hedge fund pro, and we will see you on the next one.